Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently up 0.28% to 40,107. Ethereum down 0.56% to 2758. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Rule 781, crypto technical analysis is a skill, but it's also a philosophy. We've seen many red days over the past 3 months, and a lot of people are feeling quite upset. Crypto technical analysts are always kind to themselves, and they're kind to others. That's Rule 219. The reason for kindness is very important. The way to get out of Zone 1 and Zone 2 and into Zone 3 and Zone 4, the professional zones, is through kindness to yourself. Crypto technical analysts buy on the red and sell on the green. That means that they can hold increasing losses. And it's really important to be kind to yourself when you're actually going through this. No act of kindness, no matter how small, is ever wasted. That was from Aesop. Aesop's fables, you might remember, a bird in the hand is better than two in the bush. Beauty is only skin deep. That comes from Aesop's fables. But how do you actually be kind to yourself? Accepting what has passed is being kind to yourself. Crypto technical analysts scientifically track investor attention. We mark up charts in a specific way. We look outside the chart we're analyzing, something that a lot of analysts inside crypto just do not do. And they seek to fit past price action without understanding that things can change, such as what we see with Russia, the Fed, and various other things at the moment. That's why crypto technical analysts subscribe to maintaining a positive excellence life trend, one based on integrity and decency, kindness, inner and outer peace. This is actually the fastest way to accumulate wealth. And more importantly, it's the required foundation to keep it. With our scientific process in mind, Rule 45 is incredibly important. No alt can escape Bitcoin's gravity. Traditionally, what people do when they're new to the crypto market, they just want to have a look at their beloved alt. They don't care about Bitcoin. They don't care about the stock market. Why should they? That's not part of crypto. In fact, it is. Let's just do a quick word search for Bitcoin in Reuters. Stocks fall, bonds rise, Ukraine tension. This is a search for Bitcoin. What has Bitcoin got to do with these things? The Japanese yen eases up. Okay, currency, Ukraine tension. Fidelity launches its first Bitcoin exchange traded product in Europe. That's good. That's good. Got to do with crypto. Another world, virtual assets insulated from cooling risk appetite. For now, very interesting. The Japanese yen and the Swiss franc advance on safe haven bids for as Russia-Ukraine tension rises. Gold jumps, stocks slide. Again and again, we're seeing things that are related to the outside of crypto world. A lot of problems in the market at the moment are due to Russian actions in Europe. Putin oversees nuclear drills. US says Russian forces poised to strike Ukraine just 2 minutes ago. White House says Russia could launch an attack against Ukraine at any time. We've got a lot of news coming through at the moment. If that wasn't enough, we've also got the Fed, and the Fed doing rate hikes to battle inflation and oil prices surging throughout Europe. You can see that if we only look at crypto, we're going to miss the big picture, and the big picture is what drives Bitcoin. Bitcoin in turn drives your alts. Your beloved alt will be impacted by Bitcoin's gravity. And you can see cryptocurrency as a market under $2 trillion is really, really tiny compared to gold, stocks, and bonds. But we also see that we're really, really early in crypto. The adoption phase, the S-curve, is just starting. And what does crypto actually represent? A lot of people miss this point. Crypto represents the ownership layer of the next evolution of the internet of value, the internet of money. Looking quickly through the US markets, we see we had a spike in fear as prices came down in the Nasdaq 100. Oil is actually retreating. It's having a little bit of a move up, but it's actually breaking a key level of support. That's actually good. Hopefully it continues to come down. But as we have read in the news, it doesn't seem likely. Bond prices, which are always measuring economic concern. When bond prices shoot up the wall, economic concern is growing. We've seen a rebound to a level of resistance. That is all we have seen. This is really important to understand. If tensions rise with Russia and a potential war in Europe, of course that is bad for everything. That creates all sorts of uncertainty inside the markets, all markets. And you can see from the previous slide, the crypto is really tiny. If crypto is tiny, it's going to be buffeted around, and we must always keep this in mind. But we don't see a breakout in bond prices at the moment. We can see the opposite of bond prices. When bond prices increase, bond yields decrease. Bond yields are coming back to a level of support. We would expect a technical retracement of bond prices and a technical bounce in bond yields. But of course, if Russia goes to town and starts firing nuclear armaments off, well, all bets are off. That's why we need to look at the gold price. What is the gold price telling us? It's telling us not much. It's saying, okay, we definitely had a spiking up here in the gold price. And gold price, you can think of, gold prices measure geopolitical risk. And the biggest risk in the world is Russia. Well done, Russia. What we actually see here is that gold prices have not rallied through this level of resistance. They're being contained. This is actually a pretty good sign. Seeing oil come down, gold not rallying parabolically, bond prices not going up the wall. These are actually really, really good things, but there is a lot of fear in the market at the moment. And we can see the DXY, the US dollar currency index, is just hovering along support, but it's making its way upwards. Part of our jobs as crypto technical analysts is to collect probabilities and stack them. We need to look at many charts to do that. When we look at the Russian market, this white line is the Russian stock market index. You can see it was starting to rally as Russia-Ukraine tensions lifted. It's starting to go down again. This does not look good. One of the largest companies inside Russia is Gazprom. It has 16% of the world's gas reserves. Europe is highly dependent on Russian gas. Looking a little bit more deeply into the metals, we can see gold has been rallying up. We can see copper underneath it also coming up. If copper actually falls down, that's a big concern for us. We can see palladium and platinum actually having a bounce. Silver is on the way up. Basically, the markets are interpreting that Russia will not attack, but there is a high degree of uncertainty. We follow a very specific process through to be able to buy and sell. Because the crypto market is like a choppy, stormy sea with a lot of rocks in it, if you don't have a scientific process, your ship could be dashed against the rocks. What we have is a science-based methodology of actually throwing light on what is happening, and we know the news can often be misleading. We also know Rule 111, crowd psychology creates price. In the crypto market today, we're experiencing fear. There was extreme fear yesterday. Looking at the fear and greed index, when it gets really, really fearful inside the market, that is the actual best time to buy, but it's the time where most people are selling. Again, we're always collecting probabilities. When we look at Bitcoin futures open interest, what do we see? The first thing we see is the relationship between open interest and Bitcoin's price is a highly correlated, highly positive one. Typically, as open interest goes up, the price of Bitcoin will go up. As open interest falls, the price of Bitcoin will fall. What do we notice about the trend of this? We're getting increasing interest in open interest, we're getting a restoration of confidence. Now we can see that we are under resistance. However, we note we got a level of support coming up here, and it's increasing levels of support. Just by the probability, we could expect that we could see a breakout of open interest. It may collapse down, and the only thing that would cause that is a Russian war. But if it spikes up, going on the basis of these probabilities, it could be looking really, really good for Bitcoin. And this would be exactly the opposite time where people would be thinking. This is all about crowd psychology, and crowd psychology creates price. A lot of people new to the crypto market and new to financial markets actually don't understand that people are buying and selling, and their hopes and dreams and fears actually go into those purchasing and selling decisions. Another place we can look is to Bitcoin open interest on the options. What we can actually see, open interest by strike for the end of the month is mainly positive. We can see a lot of options, actually call options, open at prices up to 140,000, and there are a lot of options open at the $50,000 mark. If option holders, the crowd, was thinking that Bitcoin's price would plummet to $10,000, you wouldn't see anything like this. You would see very high levels of puts. No matter what, we must always, as professionals, make 3 in advance probabilistic choices. Know what you will do and keep to your word if price goes down, goes up, or goes sideways. Unfortunately, when people enter the market, they only have one direction that they hold to, either up or down. The problem is that from a professional basis, you must have all 3 covered off at all times. When drawing support and resistance lines, it can be really, really useful to think of price as like Percy the magnetic price sheet. Here's Percy. Let me blow him up for a tick. Well, not blow him up, but just make him larger. Hi, Percy. Hi, Ken. Hi, everyone. Sorry. Oh, Percy, you've been so naughty recently. I don't know. Let me know in the comments what you think of Percy the magnetic price sheep. What a naughty sheep. Okay, when we're looking at price action, what we see is the price actually bounces between resistance and support levels. We've seen price go sideways, which is actually really, really good, on a lot of negatively increasing news about Russia. We're actually seeing that price has not come down, and Percy has a friend. Yeah, that's very nice. He's got a negative friend called FUD, fear, uncertainty, and doubt. And he's got a positive friend called FOMO. FOMO, fear of missing out. It's always a battle. Percy doesn't know which party to go to, FUD's party or FOMO's party, so he kind of wanders around, bouncing between support and resistance levels, just trying to figure out who he's going to visit. What is this price action actually telling us? For example, the current price of Bitcoin, $39,889. It's been consolidating here for quite a while. This means that there are lots and lots of buyers below this level, preventing the sellers from pushing it down. And the sellers are out there and they're trying to push it down, but they're not being successful. And when we go back and have a look at the crowd psychology, when we look over the options, when we look over open interest, when we understand what's happening with gold and oil and the dollar and all of those things, we're seeing, yes, there is a lot of fear in the market, but it's not actually pushing things over the cliff. You might like to think that the buyers and sellers are fairly equally matched at the moment, and it gets a bit worse than that for the sellers because we have another very strong level of support around 38,935, and all through these levels from, for example, 38,577 down to 38,485. The sellers are going to have trouble pushing it through these levels, and it really depends on what Russia does. If the drills actually end and Russia doesn't invade Ukraine, we will expect some pretty explosive action in the crypto market as well as the stock market. When it actually comes to placing orders inside the crypto market, we patiently apply the 10-5-10 rule. That's rule 18. We do a limited number of trades on high quality setups. We use and apply rule 130, make volatility your best friend. We actually use the craziness of the crypto market to our advantage. That means we're never caught by surprise on any downward or upward or sideways movement because we're always making decisions based on those three factors. Now that we've had a look at Bitcoin's price, we've actually looked over what is happening in the international markets. We need to understand Rule 32, finding the market's focus. Rule 28 is the understanding that opportunities reset daily. And this is a really, really important rule, one for you personally as well. And we're very much focused on real wealth. Rule 109 is also important, enhance pattern recognition. A very important skill for crypto technical analysts to have is that of pattern recognition. Let's have a look at this chart. This is Ethereum. You can see the blue line, that's Bitcoin's price. I call it Bitcoin's gravity because you'll see it plays out on all alts. The directional movement of Bitcoin is generally reflected by 99% of the alts. This is something to really keep in your mind. When you look at these patterns, you can see a very good amount of association. When Bitcoin goes up, that's the blue line. This alt, in this case Cardano, goes up with it. When it comes down, Bitcoin's price comes down, Cardano comes down. When Bitcoin's price goes up, ADA goes up. This is really important to understand. A lot of people unfortunately do not understand this. Have a look at Avax. Look at how well it covers Bitcoin's price action. We're seeing a little bit of a divergence here. This is actually showing more strength on Avax's side. What I'm just doing here is showing you how Bitcoin's gravity plays out on the alts. You can see DOT. Look at Bitcoin's gravity. It just moves with it. Doge, the same. What about SHIB? SHIB is showing some strength here. What about Matic? You can see basically following, but there is some divergence. Here Matic went up when Bitcoin went down. About 1% of alts will dephase with Bitcoin, but the directional movement inside this can be really, really close. CRO, we can see it's just following Bitcoin's gravity. Litecoin, following Bitcoin's gravity to a ping. Chainlink, also following Bitcoin's gravity. Notice this divergence, a lot of strength in Chainlink here. And then what happened? Gravity pulled it back. We can see NEAR. NEAR had a divergence, and it always gets pulled back. This is one of the things that you must bear in mind. If your alt escapes Bitcoin's gravity, it is gravity. It's going to pull it back. That's why understanding Rule 74, technicals beat fundamentals, it's such an incredibly important rule to understand. If you know the technical price movement, that is how price is actually moving. That's really different from the fundamental promises on where price will be. Fundamentals just seek to say price should be going up, and it's got very good reason for going up. That's a fundamental analysis. A technical analysis, you look at the chart, you go wide, you look at the stock market, you look at the news, you look at everything, and then you stack probabilities and you say, realistically, price is going this way. And it can be very different from what happens on a fundamental level. Looking at pattern recognition for the next date, we can see Uni coming down with Bitcoin's gravity. What about Mana, Decentraland, coming down with Bitcoin's gravity? Bitcoin Cash, following Bitcoin really, really closely. We can see a little bit of divergence here with Atom, following Bitcoin, diverging, coming back into sync. What about Algorand? What are we seeing here? Following Bitcoin's gravity, very much like Mana. We can see this particular price action. or FTX token, we can see FTX token has a degree of strength here. That's really important to take note of. Stellar following Bitcoin's gravity, Ethereum Classic following Bitcoin's gravity. This is why if you look at any particular, for example, YouTube station, and it just drills in to one specific crypto, maybe your beloved alt, just bear in mind Bitcoin's gravity is playing out across the entire crypto market. Looking at VRA, we can see Bitcoin's gravity is in strong alignment with VRA. What does that actually mean to VRA when Bitcoin improves? What do you think? Let me know in the comments. And of course, it's the same with your beloved alt. If your beloved alt was, say, for example, Icon, what would that look like? What would happen to Icon's price as Bitcoin rallies? Please let me know in the comments. Rose is a little bit different. We can see some divergences here, and Rose have sold off fairly significantly recently, but we don't worry too much about it because Rose is a very strong crypto. And that's why a lot of your risk management comes down to, is it strong in the first place? If it's strong, that is really good to be on your side. IOTA, we can see IOTA has been showing some strength in alignment with Bitcoin's gravity, but it always gets pulled back because of gravity. What do you think would happen to IOTA's price as Bitcoin improves? Please let me know in the comments. What about LRC, Loopring? What do we see with Loopring? Loopring has shown a little bit of weakness here, and it has sold off rather significantly. What about YGG? What do we see with YGG? It's all following Bitcoin's gravity. What about CRV? CRV has shown some divergence. As Bitcoin was coming down, CRV actually came up. But look at this whip snapback. This is all part of the gravitational pull of Bitcoin. You need to be really, really aware of it. But it's now synchronizing in. What do you think will happen to CRV when Bitcoin improves? Please let me know in the comments. Looking at CHR, we can see CHR has been coming down with Bitcoin's gravity. It had a little bit of weakness, but notice this weakness sprung back to the gravity. That's what we could expect to happen with LRC. Just always make a note. This gravity is almost a law inside the crypto space. It just is a question of when, not if. You can see the incredible volatility inside the crypto space. This is why Rule 5 is so important. You can always buy lower, and that's what we do. We never FOMO into any trade. And of course, all investors become traders anytime they buy or sell. A lot of investors say, I don't need to understand trading knowledge. But the problem is, technicals override fundamentals. Please let me know if you would like any particular crypto analyzed. Just pop it in the comments section on YouTube. I did a bit of a poll on Twitter, and Luna and Avax came up as the top ones. The Masterclass teaches a crypto-specific technical analysis. Please bear in mind Rule 141, when you actually analyze any particular crypto, go slow to go fast. Many people think that it's really easy to draw these lines in. It's not. The foundation section of the Masterclass has 11 hours of how to do the fundamental drawing of lines, and this was acquired over 30 plus years from my knowledge. I'm basically passing on my knowledge, doing knowledge transfer. The first thing we do when we look at a particular crypto is we want to understand where are the resistance lines. You can see this resistance line playing in through here. Secondary resistance lines, tertiary resistance lines, and what is actually happening to price action. We can see, for example, Luna is under a lot of pressure. It's currently rejecting these particular resistances. It's being pushed down, but it has a level of support through here and a further level of support down here. There are so many lines that we can actually draw, and one thing that you'll find is that the CTKS method actually updates hundreds and hundreds of years of candlestick pattern analysis to the point where you don't have to remember any names of any candles or any patterns. It just is all baked in. Also notice how Bitcoin's gravity is impacting Luna. When Bitcoin moves down, Luna is pulled down as well. Bitcoin was recovering here and Luna was still coming down. This is when a particular crypto gets too far away from Bitcoin's price action. We always see these kind of snapbacks, so just be aware of that. What we also see is that there is a degree of support through here, but we have to figure out how far price could fall. We have a rule as crypto technical analysts to make volatility our best friend. And all of that means that we place lower buy orders into the market at levels of support going towards the left. What we actually see here, we never worry about FOMOing in to anything because we just understand crypto is so incredibly volatile. So I'll take you through a bit of a thought experiment. For example, if we place a buy order at this 44.87 mark, and all that happens is we get that one filled and it goes back and hits this resistance line, that's a 39.82% return. If we actually place another order down and we seek to sell it at this resistance line, that's a 35% return, slightly better than bank interest. If we place another level down, what we're actually seeing here is the mathematics of percentages coming into play, and all professional investors and traders understand this percentage movement. When I say price is negatively biased, what I'm actually saying is that fear, in terms of crowd psychology, is a much stronger emotion than is optimism or greed. As a result, we can see people liquidating down very, very quickly, and it takes them some time to get a level of optimism restored until it starts to go up again. And that's why we always place our buy orders lower and then just patiently wait for them to be filled. We say excitement is a delayed fill. That means that you've put a buy order down and you're just patiently waiting for it to fill. You can see just trading inside a downtrend can be profitable, but as I've said so many times, it depends where you buy. If we get a war breaking out, it's absolutely certain that prices will come under negative fear-based momentum, and that's a thing that would keep a lot of people out of the market. Please understand that the market is always uncertain. That's why in Zone 3 and Zone 4, we actually use probabilistic fearlessness to gradually scale into trades, and we sell scaling out at specific resistance levels where we're happy with the percentage return. We never ever go all in or all out, and we actually seek to buy not on the green but on the red, and this is a very, very different way from retail thinking. A lot of people, when they enter the crypto market, indeed any market, they just think it's a matter of getting the right indicator and just getting someone to tell them when to buy or when to sell. I don't believe in any of that. After 30 plus years in the markets, your psychology will dictate your profitability. That's why I created the Masterclass, to actually do knowledge transfer. It's not simply about candlestick patterns and charts. It's about passing on my knowledge. And one of the things that I can say is the most important thing that you will ever do is to attain real wealth. And it's in the mastery of fear that we can actually have beautiful lives. When it becomes a choice of the particular percentage you choose, that is completely up to you. Please remember, experts do not know your needs. This is a very risk-less situation when it comes to trading. Some people want 50x returns. They're just realistically fantasy. What you want is to be able to get consistent returns and to be able to hold strong through negative price momentum. What you will actually come to understand in the crypto market and all markets, the more it goes down, the more it goes up. And that's really, really important to understand. Say, for example, you bought Luna around the end of December. It's currently come down about 51.61%. Now, say you could get into Luna right now. You were fresh and free and you didn't have anything in Luna. If it just came back, the percentage that it came down, it would increase 106%. This is why we say 10, 5, 10 starts at 10, goes to 5. From 5 back to 10 is 100% increase. This is the way that we use percentages and make volatility our best friend. As a community, we don't care at all about red days. In fact, black swans are the ultimate money-making venture. When people get into extreme terror and they're actually selling, we're like firefighters running into the burning crypto building. We're actually buying what people are selling. And we can do that because crypto is so incredibly volatile. It just whipsaws all over the place. But part of real wealth is not being greedy. It's understanding the rules of money and the rules of wealth. There's nothing wrong at all with buying around today and just waiting for it to retrace up to this particular resistance line. That would in itself be a 35% increase. At the current time, because there's a lot of volatility in the market, you have to make your own decisions on what you do. For example, if war breaks out, what will you do? This is a really important question. If we drill into Avax, what we can see is a very strong resistance line playing down here. We can see the price currently at 85.14. We just always assume price is negatively biased, and the crypto market is incredibly volatile, so we're always seeking to use that volatility as our best friend. But if, for example, we bought around the current price and we came back up and magnetized to this particular resistance line, what we actually see is that's a 17% return just from there. That's pretty good, better than bank interest. If we buy at lower levels, just expecting to get back to that resistance line at some stage, and you may have to wait. And this is why patience is incredibly important. And we talk about a holistic methodology of wealth. It's really important to actually understand that it takes time to generate returns. What we would see if we bought, for example, at 76.74 is a 26% return just striking that resistance line. We're not trying to get 10x's or 20x's. That stuff is fantasy, and the people that push that narrative, a lot of them are con artists. It's all about actually understanding how you can make trading a business or investing a business. And investors always become traders anytime they buy or sell. If you're an investor and you think that this trading stuff is not good, I can tell you I've done it all, and trading is absolutely the place that you will end up. We can see things in the crypto market and the stock market as well. They're a little bit unsettled. What we may see is further negative price momentum down. If we get that, we would not be surprised. What is really interesting is the degree of horizontal consolidation. These are all the buyers under here saying, no, Percy, you're not going down any further. I want to go up. Oh, and all the sellers are there saying, no, Percy, you're not coming up. One side or the other will break, and we will see a push through, either a push through of this resistance or a push down into this support, and potentially down as well. Remember, price is negatively biased and you can always buy lower. Don't FOMO and don't light switch. Please let me know in the comments, what do you think? What mischief will Percy be up to tomorrow? I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for mentoring Masterclass students. Please say hi and let me know if you have any questions. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. If you're interested, please seek out an ambassador to get 80% off. Please do not pay full price. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.